A very good morning. Welcome to the 28th of May. It's Trading Live with IG. Scotty Burns back.
Back again.
How are you?
So excited. Yeah, really good.
How have we got you back then?
I don't know. I guess just incredible viewing figures must have gone through the roof.
Yeah, that was it. For those of you that missed Scotty last time, this man I met 24 years ago. And we didn't know each other for the first 5 years. We were on the same trading floor. Scotty was the loud one. Scotty was the moody one. Scotty was the one making all the money. But then we bumped into each other in a bar in Dublin.
Oh, goodness me, we did, didn't we? Yes, I remember that.
I was across there in my kilt on a charity do.
Well, weren't you? It was the front bar at the Shelburne, wasn't it?
Oh, good memory.
Yeah.
God, I couldn't have pulled that one out.
Yeah.
And yeah, Scotty was on a nice romantic weekend with a wife.
Yeah, absolutely, yeah.
I was about to say her name, but
Yeah.
morning, Mars. Yeah, so that was 20 years ago, and then we ended up working together on the for Rod Rodriguez. And then for the mighty, the one and only Daniel K.
That's right.
On the emerging markets. So
Crikey.
I did just send Danny the link and try and get him online. We'll see if he replies.
Right, yeah, we'll see if we can get him on, yeah.
Right, good morning to you. Oh, how are you? You are full of life this morning in that the Paxman says turn the music off. Turn the music off. If Paxman says it, that's the guy from Channel 4 News, isn't it?
Well, I would be more surprised if he wasn't watching this, to be honest.
Right, well, I'll tell you what, let's go straight into what's coming up today, and then we can get rid of this music. Right, Scotty's through with me till 8:35. Then we've got Aaron Bright and Axel Rudolph bringing you investing experiences. Right, so they're bringing you investing experience at 8:35. That's going to take us into the all sessions opening bell starting to warm up on this big day. What is happening today in America, Scotty?
Well, we've got NVIDIA numbers after the close, which interestingly had been a little bit of a lag. I've picked up the last couple of days. Lot to talk about, and there's a lot to drill down. China, Middle East, margins, write-downs.
Oh,
it's going to be a big one.
Oh, Scotty's done his work.
Thankfully, it's after the close, so we don't have to worry about it till tomorrow morning.
Yeah. We don't have you in tomorrow. Right, 9:10, we've got Psychology of Trading. ESAR is running. Scott, well, I'm not sure who's running that one. Are you running ESAR through the Psychology?
Hopefully he is. No, I think it'll be incredibly interesting. It's a very interesting topic, especially at the moment, which actually the quote of the day does tie quite nicely into as well, whenever you're ready for that.
It's really interesting because we've got a meeting of minds there. ESAR, of course, is our psychology expert and trained. And then Scotty has made every mistake that a trader could possibly make.
Absolutely.
In the 37 years he's been trading.
Including not leaving Credit Suisse when the orchestra stopped playing, yeah.
What was the moment that you went, oh, shit?
At Credit Suisse?
Yeah.
It's one of those things, a slow decline is always managed in your mind because you never think, as I was saying to Rob outside, you don't ever think it's going to happen. But when I saw the Q4s back in February of 2023, and global equities made $6 million.
Wow.
You think to yourself, everyone's given up.
Wow. Oh, that's painful.
So that's, yeah. And for context, that's probably a 99% drop from the highs or whatever it is. But yeah, it's one of those things you don't think it's going to happen until it happens, right?
What happened that morning after SVB? So what was you go into the office?
Yeah, it was just, I mean, you couldn't have written a script that was more well designed for taking something down. I mean, SVB was contained because, you know, our problems weren't with US Treasuries that SVB's was. It was just, you know, unhedged interest rate risk, which is a separate topic. But just the whole theme around when you've got a GSIB, or globally systemic investment bank, for the people who don't know the jargon, basically had been a very quiet bank run. And if you've since read the book called Meltdown, which is a story of the Credit Suisse history, but well, there's been 4, 3 have been written by finance professors, which you can use as doorstops. But basically, there's one written by a Bloomberg journalist, and he details where we went to the SMB, effectively asked for a sort of lending facility just to reassure the market, and they basically refused. So that was all obviously all happening behind the scenes, but yeah,
wow.
If you're changing CEOs at a rate of more than 1 per year, that's probably a bit of a sign. But again, if the people that you work with were still right to the very end, some of the best people, as you know, right, some of the best people still do their job, you know, and unfortunately, these things happen slowly then quickly.
Yeah. That was it was a slow deterioration, wasn't it? I mean, to be honest, it was. Even from post-financial crisis, then the SMB just strangled that appetite for risk, didn't they? Compared relative to America.
Oh, completely. And listen, I mean, I think for UBS, ironically, where they had their hands tied for so long by the SMB because of the fact that they had to have, 2 bailouts in 3 years or something, that actually ended up to their advantage. I don't think the Swiss could stomach having to do another bailout. But again, like all these things, it's like if you remember how many times have you had a manager come up and say, right, okay, you've got to cut those.
Tap on the shoulder.
And that's always the top or the bottom.
Yeah. Scotty. Right, good, man. A very good morning to all you guys as well. Yes, the music is stopped now. R6N, good morning to you. Even Monkey Man said, you know when you've peed off Monkey Man, there's a problem.
Yeah, you don't want to upset him. Don't want to upset that man.
Good morning, Shrimp Fred. Interesting. Shrimp Fred. Is that new? Don't know if we've seen you before, Shrimp Fred. Apologies if we have. And Maturin. Good morning, Maturin. Do you still have your Smarter Web company? Hit £1 yesterday. It topped out at £1.05, I think. So, tell us if you've still got it. Because now Trump's trying to get in the party, isn't he?
Yes, that's right. That's right. You can't. I mean, it is a new development, right? From where they've said that they'll seize Bitcoin that's effectively been sort of left hanging around by various criminals and scoop it up into the strategic Bitcoin reserve. But now
he wants to be a MicroStrategy.
Yeah.
Okay, let's go into overnight action. Find out. Right, so yes, Trump media getting into the action yesterday, announcing $2.5 billion fundraise. And this is really interesting. It's $1 billion of equity, sorry, 1.5 of equity and $1 billion of convertible bond. So how did the stock react? Well, you think it would be fantastic, wouldn't you? Because, of course, all these companies that are putting treasury Bitcoin on their treasury are performing well. No, down 8%. And you can see I've actually made a couple of sneaky little purchases there. And I forgot that what happens when you launch a convertible bond that is 20% of the size of your market cap?
Dilution.
And all the hedging.
Dilution, yeah, and all the hedging there.
So all the hedging of this convert yesterday really took it lower, and you can see during the day it was the stock was up 10% pre-market on the story run by the Financial Times that they were going to raise up to $3 billion to buy Bitcoin, and then at 2 o'clock the news came out, it dropped, and then it went back up to 2670. Now, why am I interested in this? Well, of course, we've watched what has happened to Smarter Web. We've watched what happened to MicroStrategy. Smarter Web is trading on 20 times its net asset value at the moment, right? Punchy, to say the least. MicroStrategy trades on 2 times its NAV, net asset value. So therefore, if Trump Media buys $2.5 billion of crypto, in theory, it should trade at a certain multiple of its NAV. If it buys $2.5 billion of Bitcoin, even if we, here it would be trading at about 3 times its NAV. So is there room for more upside? And that is my idea there. It's small. It's not a conviction trade by any means. But on the announcement yesterday, I did think there's a chance of one of these sort of re-rating moments of this company not really being anything and having no assets and no profits to trying to jump on this bandwagon.
I would imagine generally because you got, I would imagine there's a decent amount of hedge fund representation in there, and they don't generally love convertible bonds at the outset. So that's probably...
So it's a switch of ownership.
A bit of a switch of ownership. They, potentially there's a bit of overhedge. And I think the difficulty is, you look at hedge fund performance year to date, and that's also something else we can speak about with ESAL, where, as we know, if hedge funds are struggling to make money, then generally as traders, we generally struggle to make money. So I just think it's one of these things that I think you'll suddenly look around in a month's time and...
Well, I did buy some options as well. I bought some of the $30 options. Okay. So either this thing's flat and it's dead and the dilution sinks it. Sure. Or it re-rates up 25%.
Yeah, absolutely. Yeah, I can see why you've done that.
Right, so that is the old Trump media. Yes, we have got NVIDIA coming up today. That's the exciting one. We're going to do a preview of that coming up soon. But, Scotty, what did you notice overnight in the Asian moves?
I think what was interesting yesterday in the US briefly was the fact that you've just had yet another narrative switch, whereby I think, this time last week, we were suddenly worried about the bond market. Yeah. You've had a 3-month and 6-month auction. That's gone fine, boosting consumer sentiment. I think what was interesting seeing the Russell actually outperforming S&P and Nasdaq yesterday.
Oh, I didn't notice that.
Yeah, so breadth is right back up towards the highs again when it started fading last week. So I think follow through is going to be the key thing. So obviously NVIDIA tonight, that should be a catalyst. You've got another, I think you've got a 2-year auction this evening as well in the US, or maybe a 5-year. But yeah, I think Asia's probably the focus again. Hong Kong's been stalling for quite a while. I think that kind of needs, I think Hong Kong-China story needs a bit of a fresh catalyst. Yeah. But yeah, seeing the Nikkei down 1.5% on weak demand for a 40-year bond auction.
Chart up.
So you had the Ministry of Finance yesterday did say that they'd be adjusting the amount of bond issuance, which obviously helped the market rally on Tuesday, as you see there, and then markets around the world helped calm the bond market. But then you've had a week. I couldn't find the bid to cover details for the auction, but effectively on Bloomberg it was saying it was weak. So you just saw there from the open selling again. Look, in the context of the Nikkei and the ownership, i.e., 53% of it held by the government anyway. But I just think that's interesting, probably in the context of the last few days. Europe and the US, I think Europe's looking a little softer last time we checked. Obviously, it's still trying to recover from the volatility of Friday. But yeah, I think Japan for me is just probably something just to bear in mind, just a little reminder, just that, the bond story, I think,
all is not well.
Not over. Yeah, exactly. All is not necessarily well.
So what you got? You had the S&P got up as far as, I think it was 5,925. So big rally, closed at the highs yesterday, as the Nasdaq did. 21,400. FTSE looking small down this morning, nothing major. That had a good day yesterday. And then, Germany probably near all-time highs again, isn't it?
Yeah, it's interesting on the S&P. We've got, if you have a little look at a slightly further out chart, 595 is quite a big resistance, which has failed just a couple of times for various reasons. So I would imagine short-term between now and the weekend, because having one of our favourite data points on Friday, PCE, as we know, the Fed's preferred measure of inflation. I did really interesting thing actually in Bloomberg today from John Authors, where he said that, and this could be why Powell is ignoring the soft surveys, because so there's apparently a market in inflation swaps. There's 1 year and a 2 year, so it's not the 5-year that we look at, or 2 year. There's markets in inflation swaps that barely moved all year, evidently. So
Goldman's have actually come out this morning and they've said that they are stepping away from their higher for longer inflation call.
Yeah.
And what they're now saying is, yeah, you get a one-off move up to 3.6% on the inflation numbers, but then it tails off, and the Fed get to their target.
Yeah.
So according to Goldman's, no inflation problem. If only it was that easy.
If only it were that easy. Exactly right.
That's that story. That picture doesn't really tell the story, does it? On the chart here, of what happened there in that sell-off. It looks like just a blip, doesn't it?
Yeah, I mean, look, it's like all these things. When you're in the middle of it, and again, this is another one for ESOL. When you're in the middle of it, you cannot help, as much as you try to just focus on the price action and not look at the media. It's quite difficult not to get yourself in a bit of a tailspin. But yeah. Now looking back, it was as interesting. A guy called Rob Armstrong in the FT, actually, so shout out to him, has coined a phrase called the taco trade.
Yeah, we only discovered this yesterday.
Did you discover it yesterday? Yeah,
oh, please do tell.
Trump always chickens out is the narrative there. So yeah, I mean, and again, if you believe in the consensus effect, you know, are we getting to a stage now where, because we think he always chickens out, and only a few percent from all-time highs, are we about to get something a bit worse? I mean, I don't know. This is just all the second guessing that we love to do. It's
a day for expectation management.
Yes.
Because understanding where markets are relative to expectations is all what NVIDIA is going to be tonight. So, yeah, you've got this the tackle trade on Trump, right? Tariffs are never actually going to come to the table and be consequential. You've got expectations that NVIDIA repumps the AI trade tonight, but are the two going to meet? Are China tariffs going to cause Jensen to be a little bit cautious on guidance tonight? That coming up shortly in our preview of NVIDIA numbers. So chart off, and I'm just going back to that Nikkei chart. Do you know what this reminds me of? Just in the last sort of 12 hours, Scotty. What does this chart remind you of? I think that looks like Dr. Watson's date last night.
Oh.
Now, I know that you've all been waiting for an update. James, in the gallery, who is in charge of visuals right now, so I better watch what I'm doing.
Exactly. Be very careful here.
He was going on this first date last night, and this new dating app gives them one free drink up the Shard.
Oh, wow.
So he took her up the Shard, and they had their free drink. And then she said, "Shall we go somewhere cheaper then?" I think that's very responsible.
I think it's incredibly responsible, yeah.
So back down the Shard into Borough Market, and let's have a poll. What time did the date finish last night? So did James's date finish at 7:30, 8:30, 9:30, or 4:30 this morning?
Yeah, there we go. I mean, I should confess, I'm an insider here, so I can't possibly, comment. But maybe the weather was a factor as well, because I think the weather last night very wet and windy, very blowy. So maybe the Shard wasn't setting the right kind of ambiance.
It was, yeah. There we go. Right, there's your poll is up there for the day. Only time won't tell. Brilliant. Phil's gone with his own answers.
Yes.
Good. Right. And the added bit of information that it started at 6 p.m.
Yeah, very good.
Right. Shall we take a look at the front page of the Financial Times? Those wonderful lot at McKinsey. What's happening there? Doesn't look great, does it? 10% of staff being cut. It's something, you know, there's a joke there about getting a dose of your own medicine. Yeah,
a little bit. I mean, I remember speaking to consultant December 2023, and he said the firm he'd worked at had basically grown tenfold in about 5 years because of Brexit and regulation and so on. And he basically said, regulation is the driver generally for consultancy. So if there's a new sort of regulatory regime, a new set of circumstances across the market which necessitate consultants, because he did say effectively a lot of his consultants are effectively on 0-hour contracts.
Okay.
So they're all self-employed.
Yeah. Yeah. Tax
So
dodge.
yeah, well, potentially. But yeah, it's I mean, especially for someone like McKinsey, which is definitely in the more lively parts of industry generally.
True.
For that to slow is probably another.
The big question is,
slightly negative.
did they get a consultant in to come up with?
Imagine, who did they bring in? Who did they bring in? Yeah, who did they bring in?
So that's one story. The second story: Elon Musk criticizes Donald's big, beautiful tax bill. Didn't expect that one.
Well, so again, this is context, right? It said, I mean, I read, if you look at that second paragraph halfway down, he was disappointed to see the massive spending bill, which increases the budget deficit and undermines the work the Doge team is doing. So yeah, I think a bit disappointed is I'm not sure it kind of, strong criticism, especially because he doesn't really seem to care. But yeah, I mean, look, it's certainly an issue. But again, this is no surprise. But I guess it's still got a lot of political wrangling to do before we get anywhere near to being implemented.
Where do we think his relationship with Trump is at the moment? It's been a roller coaster. You can take that off, thanks guys. It's been a roller coaster with regards to, he was vice president for what felt like about 2 months.
Yeah.
And then Tesla's, probably dropped 50%, 40%.
Yeah.
And he definitely stepped out of the limelight when people started attacking Tesla cars. Do we think that he's still in the clique, or is it now all Besant?
I guess you could say all the Mag 7 guys are probably still in the clique. I think it's pretty clear that, he doesn't necessarily have much influence around setting of Trump's policies, because there's a clear split where you got Lutnick and Navarro are kind of, go on, more tariffs.
Yeah.
And then thankfully, as I said to Rob outside, thank goodness that the Treasury Secretary is Scott Bessent.
Absolutely. He's saved.
Well, yeah, I mean, he's known as Scotty B, which, as we know, has annoyed me because there's only one Scotty B in finance. But, I think
and that's Bessent, yeah.
Absolutely, yeah. And having an adult at the wheel there, I mean, I think that he was probably, I think he peaked on about third day when Trump was in office of saying, isn't it incredible how some members of the Senate make, $15 million a year trading? Maybe we should get them in to advise us on stock markets. That for me was...
Who said that?
That was Musk. He stood up in the over, I think it was a couple of days or like a day after election. He literally stood there.
Fantastic.
So yeah, I think it's, I don't think he's got, or has never really had a great input into policy. I guess.
Right, one last story, which is not a particularly positive headline. UK at risk of gilt turmoil yet again. And that is, it looks like, is that Tom Cruise warning? Is it?
Yeah, I would imagine so, yeah. I mean, if you're going to get more growth, that could be Mission Impossible.
Hey, very good. That's why I spent 20 years on a desk with the man.
Absolutely, yeah.
Government debt is more vulnerable to sudden sell-offs due to higher presence of hedge funds and foreign creditors in the bond market. They are, of course, part of the bond vigilantes. As part of its annual assessment, the IMF highlighted potential vulnerabilities in gilts, including the declining role of patient investors such as pension fund and insurers. Is this I was about to say a victim of its own success, but almost a victim of its own demise, in that volatility attracts hedge funds?
Yeah, of course. And I think you have to get into context the actual size of the market pie that hedge funds are. Yeah. And don't forget, even a BlackRock and a Vanguard, etc., have their own hedge funds or active management arms or whatever. So I think the definition there is key. Obviously, you'll get less loyalty from a hedge fund as regards, holding a position, or let's just say more flexibility around positioning. But yeah, I think hedge funds have just got so many or such vast assets under management. I mean, I remember an analyst saying to me 15 years ago, a lot of the larger hedge funds were effectively long-only funds.
Right.
Because they've just got so much assets under management now.
True.
They have to behave and invest like a more traditional long fund.
They look different from when you first started in the
enormously.
in 1850.
Yes, that's right, exactly. Yeah, it was all done on, exactly. Business was all done in coffee shops then, so it was much more pleasant.
Right, it's time for that like and subscribe shout. Come on, give us a thumbs up. If you haven't given us a thumbs up after poor James is putting himself out, you know, talking about vulnerabilities.
I mean, starting with that before 8 a.m.
Yeah.
If that's not worth a like and subscribe, I mean, that's literally everything.
He got his date to subscribe to the channel yesterday. She might be watching right now.
Yes, well. It's on the comments.
So yeah, please give us a thumbs up on the YouTube. That is under where we're sitting right now. And also, if you haven't subscribed, we're almost at 800. Seems unbelievable. But 750 was our target on Friday. We're almost at 800. So please give us a subscribe if you are watching us and not subscribed at the moment.
It's a nice comment there from Turkey. I like that.
Just saying, one of them wants to see James's face before he votes on what time the date finished.
Yeah, exactly. Yeah.
We'll see you after the break at 7:56. Come back for the London Stock Exchange opening bell.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Yeah, I can't see a lot.
Welcome back. We are 7:58. Look, Scotty got his glasses on. Hey.
Absolutely. I still had 5 IQ points, evidently. That's the only reason I've got them.
Shall we run through a dummy trade, right? So I'm Natalia Maximova, and I'm sitting here. Scotty, I've got Fidelity on the line. They want to send $10 million of Hulk Bank. What do you then do?
Well, so you would look to offer them a menu. So you price the first, second, and third tranches out accordingly to their risk profile.
And why are you doing that? What is a menu?
So a menu is basically a tiering of pricing. So you'll have an agreed liquidity point at which you offer certain customers, depending on the category of the customer. So you'll have a certain amount of size. So let's just say, for argument's sake, $3 million on the screen price.
Yep.
And then you would move the price out a little further for, say, $5 million, and then a little further again out to $10 million.
And that would want to do the full 10, of course, wouldn't you?
Yeah, absolutely right. Yeah.
Right. Where is your bell, sir? Let's get the opening bell. We've got 5 seconds. 4, 3, 2. There we go.
Look at that.
And the market is off and running with Flutter at the top. Seems appropriate. Up 60 basis points. But The rest are having a little bit of a delayed opening. Kingfisher down 3.5%. We'll get the news for you there. It's only Wednesday, isn't it? Yeah, no ex-dividends. We've got expectations was, well, National Grid had been cut to sector perform from outperform at RBC. And yeah, pets at home looking up 1% on numbers. Right, there we go. British American Tobacco up 80 basis points. It's not usually ideal when your best performer in the FTSE is British American Tobacco, is it?
No, you could say it's a slightly dull start.
Wonderful company down there in third place. ITV up 40 basis points. And yeah, BP relatively unchanged. BP is just stuck at that 360 level, isn't it?
Yeah, it's just, yeah, I think with executive changes first, but again, these, I mean, it is a definition, if you'll pardon the pun, it's the definition of attempting a 3-point turn in an oil tanker, isn't it? I mean, it's just years and years of infrastructure in place. It's just...
Let's get the news on Kingies here. There we go, right. Reiterating, so Q1 trading update, revenue 3.3 billion, reiterating full year, but the market's not happy with it. Unchanged on the outlook.
I think that free cash flow is probably a bit of a worry.
Ah, yeah, there's a good spot. So, yeah, free cash flow 420 to 480. Right. So, yeah, Kingies, the market not liking that. Let's look at how it's been recently. Let's do the daily. Oh, yeah, it's, has it had a good run into it? Decent.
Yeah.
Decent. So, that is Kingfisher, of course, the owner of B&Q and Dart. They still got Darty across in France, I think.
Oh, maybe, yeah. Yeah, maybe.
Right, what else we got on the movers then? Rolls-Royce, boo. So reminder, Rolls-Royce share price is our target for subscribers this week. We're trying to get to, well, we're almost at 800 today, but we feel like we've got we're chasing it here. Stock up 1% at 860, so we have to get 860 subscribers by Friday. That's up to you if you're watching and you're not subscribed. Vodafone up to 78 pence. Wow, that's a decent
ride, isn't it? That's been a wild ride.
Yeah, there's a CNBC article on it today as well. Let me just see if I can get that up. Yes, CNBC UK Exchange newsletter, an all too familiar dial tone from Vodafone. So it's trying to say, it's CNBC getting a bit impatient here. Repeated references to an inflection point or turning point by Vodafone CEO, underlying just how long this company's been disappointing investors. Well, the share price is up 10% in a week, so let's see. Long-term followers could be forgiven. Yeah, so it's just it's a opinion piece, isn't it?
Yeah, exactly.
Let's see
what. It's not anything, right? It's a case of what's your time frame. If you look on a 5-year chart, you could probably argue it's disappointing, right? So
it's been a shocker, yeah.
Yeah.
Right. Let's see what conclusion they come to. This is a company that has seen countless false dawns, and investors mindful of its recent past would be wise to be cautious. Risk and return.
That's right.
Right, so that's Vodafone clearly having a big impact on the stock, up 50 basis points. But not too much excitement around there, is there, Scotty?
No, not a great deal. Which Rolls-Royce is just... Oh, Rank as well. Is Rank down? Rank down?
Yeah, Rank down. I think that could be a widespread, but we'll see. We had the same problem yesterday on Rank, showing up 4.
Oh, really?
So, yeah, Burberry... Burberry over £10.
Yeah.
Glencore 272, but yeah, relatively quiet ahead of, well, basically the world's looking west, isn't it? The world's looking
exactly.
to the US today. Let's see if there's any movers in Europa. Scotty, do you want to take us through the winners there?
Yeah, so Rheinmetall, that's a big favourite. I think that shows you that a lot of the a lot of the marginal buyers of Germany are back on the front foot there, because I always use Rheinmetall if you had to look at a single stock in Germany as the risk barometer, because a lot of people are overweight that for the stimulus package and the follow through into defence.
There was a European security conference yesterday in London.
Yeah.
A lot of the Tory party were there.
And I did see, I think it was a quote from German minister yesterday, so it's just saying that they're happy to authorise any kind of attacks on Russian forces in the Ukraine as well. So they're talking pretty tough there. So that whole defence thing is back in focus.
Yeah.
Just see the cars better.
Yeah, cars
actually, Ubisoft, last time I was in here, that had the big sell-off, right?
Oh, yeah.
I just wonder what's actually happened with that.
Yeah, tricky one.
Just clawing back, yeah.
Aiden's probably too old to be playing computer games now, isn't he?
No, still loves his Fortnite. Still loves his GTA, yeah, no, absolutely. Yeah, I mean, at the moment, he's literally under the Herculean weight of A-level revision, but I would imagine once that's over and done with, then, yeah, we can actually relax a bit.
Back on it.
Yeah, back on it.
Right, let's see the losers
Interesting, actually. A lot of the industrials are strong, aren't they, in Europe? Which is quite, that's a pretty good sign, actually, isn't it?
Now, Adidas got up to 220. Scotty, the discussion yesterday was, are all Adidas shoes now looking the same? Have they missed coming out with something, sort of to build on the success of the Sambas and the Spezials? I think so. So I am actually going to take a little bit of a short there. Nike, huge day yesterday.
Yeah, massive day.
So shorting 50 at 220 euro. That's to open.
I think Nike's issue is, still, and for youngsters, where you're still seeing blokes of my age who are in the Air 270s Nikes. It's not seen as a desirable brand.
Because you're wearing it, Scotty.
Absolutely, yeah. Well, I just think some of the comments you've been making over the last year or so about some of these other brands, and Adidas, I mean, it's interesting. Neither of my kids are really interested in Adidas. They used to love Nike. Mm-hmm. Now they actually wear Hokas or however you pronounce it. Got the Hokas on today, my first pair, actually. Same as my daughter. She keeps nicking Marcella's ones.
Right.
So, yeah, that's obviously still very much brand visibility. I think their message around a bit more sports related, I think the issue would be with Adidas as well, with those new old models or the revamped old models. People only fall for that because you get the kind of nostalgia. That's it. They're very much 1972 Olympics kind of thing, aren't they? Yeah. That is the look. Yeah, I think the nostalgia trade only lasts for a certain amount of time. And let's see, the PE ratio, normalized PE ratio of 53. I think that comes down. I think that's more in the 30s from what I remember. So not sure how accurate that is. But yeah, EPS 12-month trailing of 571, and we're on a 220 share price. So on the tip ranks, they are a strong buy on a 7 smart score. Let's see what the experts are saying. Citigroup, definitely a big fan with along with Bernstein. Yeah, wow. So some big targets there. Let's see if there's any bears out there. Not really. Interesting that it's the US houses that are more bullish. So maybe there's more take-up of Adidas in the States. Yeah. Perhaps. There we go. One bear. And that's now 2, along with myself. There you go, see. Okay, right. Quick look at the FX and commodities. We've got an interesting move in the pound today. Well, I guess you should say the dollar, really, because it's moving against all the currencies. But what are you? Oh, it's recovered a little bit actually. It was lower earlier. Yeah, I mean, sterling's holding that really strong trend actually. In spite of, I mean, you're getting just 1 or 2, even though you have some of the warnings about things like the gilt market that we looked at and some of the concerns over growth. We have been surprising a little to the upside in the UK. And with the Bank of England sounding a bit more hawkish, and at least the Monetary Policy Committee does seem a bit more flexible. Yeah, but we're at 135. That's the thing that it keeps on. Yeah.
I mean,
Again,
135 is like
it's one of these things
Brexit
that
kind of thing, isn't it?
yeah, I mean, if the trend is in the trend's in place, then
Let's
it's actually
go.
funny. I have these conversations a lot with people where
Trend is your friend.
because we're used to thinking about the fundamentals. Every time you look at a price chart, your brain immediately starts to process what your view is on something.
Yeah, absolutely.
And then you're thinking about historical numbers. And the thing is that
That's tricky, that
you
chart.
just have
actually,
to
isn't
look
it?
at the price action, right?
It does, yeah, to be honest, it does
yeah.
actually look quite impressive. If let's take that. Well, that isn't interesting, isn't it? Actually, Axel's coming up next, so maybe we get Axel to speak about the dollar and in particular GBP after fast markets.
Yeah, interesting.
Speaking of which, right, Fast Markets is going to be dedicated to NVIDIA today. That's coming up in 2 minutes. What are the numbers going to be tonight? 9:30, I think they come out. 9:15 or 9:30?
Certainly after 9, without a doubt.
Yeah. But yes, we will be covering NVIDIA coming up in 2 minutes' time. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
So welcome back to Fast Markets. Here we are, the part of the show we normally take your ideas. We normally have views on what's going on, but there is only one game in town today, isn't there, Scotty?
Yep, absolutely. NVIDIA or nothing.
NVIDIA or nothing, that's right. And welcome to the chat, Miss Natalia Maximova, the finest emerging market sales trader in the city of London. Now, Natalia, tell us, are you sitting on the Citibank trading floor right now or work from home? Tell us. But if we're going out live to the Citigroup trading floor, then hello to you all. Like and subscribe.
Right, yes.
Now, NVIDIA earnings preview. Here we go. So it's going to be a really interesting one, people, because, of course, you've got the $5.5 billion of write-offs that he had to do because of the tariffs on China, right? So we already know that, but you don't know how much that's going to impact the numbers. How much room does he have to incorporate that into what he previously guided to, right? The expectations are 88 cents of EPS, which he always beats, right? So it would have to be 90 something for the market to be happy. And then the revenue is 43.26. However, if we go, this is the tasty preview. We'll pop that in the chat for you so you can go through the whole thing. But yeah, you find it on the Tasty website, tastylive.com, NVIDIA earnings preview. However, if we go to the times today, just chart off a second, I'll find it, guys.
Here we go.
Party time again. So it's quite a funny preview, actually, because it talks about how people arrange parties for NVIDIA results in America.
Oh, wow.
You having a party tonight, Scotty?
I haven't planned any. I'll let you know if that changes, and of course you'll be invited, but yeah, no plans at the moment.
But let's get down to there's the graph to start with. Look at that. Meteoric rise. Here are the 4 things to watch for. The impact of the US export restrictions to China. Right, now, we know that he's written down $5.5 billion of stock. No company in history has ever written off that much inventory, he said in Taiwan just a couple of weeks ago. Right, so what is he going to say with his guidance? Because his guidance is going to be really difficult, not knowing how those China tariffs are going to end up. Or has Trump whispered in his ear? Is this actually going to give us an indication as to how set Trump is on these tariffs? Because Jensen probably knows what the game plan is.
He does. I mean, I think if you look at the conversations they've been having with Apple, where all of a sudden they can just kind of flip around and say, right, if you don't make Apple phones over here,
yeah,
you're going to be hit by tariffs. I think Trump knows that, you know, you can't tie the hands of NVIDIA too much. But again, there's probably, I would think there's enough from a control perspective for the Chinese flows now to make the White House and the security people happy enough with that. But yeah, I think that maybe, as we were saying in the break, he'll try and focus on the Middle East still. But at least, as we said before, because of how accounting rules work in the US, you can't move things from one quarter to another.
Yeah, and that's going to be the tricky thing. So if he puts this $5.5 billion charge all through, then there's a chance that you do see a miss. However, it's not all negative. There are positives, of course. One being the big deal with Oracle, so $40 billion worth to install into OpenAI's data centers. And then, of course, we've got, as Scotty alluded to, we've got the deal in the Middle East, which has been monumental. That's, was it 18,000 Blackwells?
It looks at, yeah, if you just scroll up, it looks like it's here, 18,000. You can just read that at the top of the screen, yeah.
Yeah, there we go. So, yeah, 18,000 of its most advanced chips to AI, Saudi Arabia's PIF AI subsidiary.
Yeah.
And then we've got revenues. Revenues, 43 billion. So that's a rise of 66% from the 26 billion last year. The guidance was 42.1 to 43.8. So again, it's got to start with a 44, really, doesn't it?
Yeah, I think it really needs to. I think margins are going to be a focus, as we know, for these high growth companies. Once they start to plateau a bit, then margins are going to be the next thing they're going to really focus on.
Well, there we go. So the problem with the company's gross margin is expected to have taken a hit from its write-down because of the changes to restrictions on exports to China. The guidance was for a GP margin between 70 and 71, right? Now, that was already disappointing. Okay, 71% margin, of course, coming down from 75. The guidance was then in Q4 for the margin by the end of the year to get back up to 75. If we see a margin here, as analysts believe, at 67 or lower, that could be really concerning, even though it's just from the one-off hit.
Yeah.
So
it's still so widely held, isn't it, and widely traded. It will have a knee-jerk reaction no matter what happens.
And I think that's what I'm going to play for, is the knee-jerk reaction, right? Consensus has already pulled revenue expectations for Q2 down to 46 to 48. All right, so that's the normal. Jensen normally beats by 2 billion on sales, and he raises by 2 billion. So if that was true today, you would have a revenue number of 45.5, and you would have guidance of 47.5. Right, that would be what I would call the whisper number.
Yeah.
Or, yeah, at least let's say 45 anyway. 45 and 47 would be the kind of whisper number. But what is the EPS going to be? Can he say that it's, it's obviously a one-off if EPS drops down to 84 or something like that?
Yeah.
He says it's a one-off, and then business as usual Q2. Will the market see through that? Or do you get a shank down when the numbers come out and then it bounces back up on the conference call? How do we play that, Scotty?
I mean, as we said, right, it's all about what he's saying afterwards. I think looking at the numbers, there's a lot to digest. I can't imagine there's going to be a tremendous miss because of the performance into it, but yeah, I definitely think there's, and what people still love to watch is the performance in the aftermarket, right? It's just such a thin market, like the pre-market as well, right? Same kind of thing, whereby, as you say, if there's a proper knee jerk, then it should be right to fade it.
Well, does he? What can he get away with?
I think he just really has to focus on these new deals, what's upcoming in the pipeline, because effectively a write-off, it's already happened, everyone knows about it. So you can talk about it, but it's how, I think because it's been such a growth stock, it's almost been, as you say, if they've been hosting parties for NVIDIA numbers, that tells you the psychology of most of the holders of it.
Getting him to sign their bodies.
Yeah, all that kind of stuff. And listen, I mean, if you have a CEO who can still manage to get away with wearing a leather jacket, then I think that's good going, right? But
you got a leather jacket, haven't you?
Yeah, somewhere. I'd like to say it's for riding my motorbike, but actually that's been so long since I've done that, I can't get away with that. But
no, why? How come?
It's just
getting old, Scotty.
Road safety, swinging my leg over, etc., etc. So yeah, no, it's
been a while.
Yeah, enough about my personal life. No, but
right. Let's look at the expectations in that.
Yeah, I was going to say options is going to be interesting, isn't it?
There is a $9 expected move. So $9 being 6.5%.
Yeah.
But about that.
Yeah.
Yep, 6.5%, 7%. Vol of 99. Let's open that deck and let's look for what we could play. So if our expected move is around $9, and it closed last night at 135.5, that takes us to either 126.5 or 144.5. So that's our expected range, 126.5 to 144.5. If we get the number comes in weak, we get that move down, but then a potential rebound when he speaks on the call, how am I best to play that? Because the options market will be closed. So I need a stock position.
But I don't think, I mean, as you saw earlier on, he's speaking to Jim Cramer pretty late on at night, isn't he? So I don't think the difficulty is going to be actually picking up any exposure before the market opens the next day again. I mean, you know, NASDAQ futures are a bit loose. I know it's a big component, but...
Oh, the NASDAQ will definitely move on it, yeah. So if we sell... If I sell something like a 125, now do I short?
Do you really want to play risk reversals?
100.
You want to play risk reversals in NVIDIA? I mean, that's
Yeah, because it's not even the the IV rank's 27. So yeah, it's low, but it's not too low. If I short 100 shares, and I also short a 140 call, so it's no, I can't do that. Too short.
Yeah, I was going to say it's a pretty bearish.
I want to be short the stock for a weak number, but then I want to buy the stock and go long as soon as the number comes out. So basically, I'm best just to not have a position and have some bids.
Yeah, listen, I think that's absolutely right. It's a bit like having a view on non-farms and you're taking a position at 129. So you're stymied by having a position.
Yeah, exactly. So go into it, no position, have a bid in there at 120.
Yeah, I think fade
127.
Fade the extreme, exactly. I just think look to fade the extreme.
The more interesting one is I've also got this in my ISA that I managed to pick up at 93, I think.
Oh, wow.
I got to take half of that off, don't I, coming into this?
I mean, again, the argument is always what's your time frame, right? So you can still be long NVIDIA, but look to trade a potential sell-off and look to buy more. It's a trading position against an investing position, right? And not confuse the two. I mean, if you're in at 93 on a stock like that, which is arguably a large component of the future, then really you shouldn't be thinking about it. If you were long at 120.
Yeah, but let's dive into the actual EPS, right? So the EPS is meant to be, say tonight it's 90 if you take out the one-offs. So he progresses, he raises 2 billion on sales, so 99. So you're talking about a potential $1 average per quarter, so $4 of EPS, right? $4 EPS, and we're at 135 bucks. So NVIDIA's trading on 33 times earnings. It's not like this is, you know, still in that early days of growth.
Yeah, I mean, if you really wanted to have a strong opposite view, you could almost say for now, until the next new game in town, it's almost becoming like a utility.
Yeah.
Where, okay, everyone knows the story now, or they think they do. So yeah, I mean, if you wanted to play slightly devil's advocate, you could potentially say, if you wanted to lighten some of the load in your ISA with a view to getting back in at a higher price, almost a stop, if you like.
Yeah.
Once it happens, it sounds like you probably want to just lighten the load a little bit, perhaps, on your ISA, and then not do anything on the numbers. So at least you've done something. So that's an affirmative action. Taking
a bit of profit, because I mean, it's moved up 35%. So even taking the profit out and keeping the original investment might be nice. Luke Moore pointing out that NVIDIA's been inside as an expected move the last 9 reports. That's probably why it's only a $9 expected move. Now, last thing we'll do before we get Axel in here, the July expiry. So if we pop that options tree back up, the July expiry is an expected $16 move.
Wow.
So selling at the money calls could net me $9, well, nearly $10. So instead of selling my ISA, do I just turn it into a covered call by having that long-term position, but knowing that I don't think they race away in the coming months because of all the tariff problems?
Yeah, I think certainly over the summer, effectively, you start feeling the pain at 144 or something, at 144 and a half.
Yeah,
it's the covered call. I think that's the only other option, because that's the difficulty around selling a piece of your ISA holding.
Yeah.
Because no matter what you do, that's almost like a permanent thing. Whereas at least here you're giving yourself flexibility, and then you don't even have to trade in the aftermarket, right?
True.
Because if you sold your July calls, you got the time. If you were selling
covered call, man.
If you were selling Friday's ones, then of course, then you're compelled to act. But that's going to be the difference between being compelled to act versus having room to. And you could almost actually look to trade around that if you wanted to.
And I don't see how you can get a huge beat tonight. I don't see where a huge beat comes from.
No.
And an expansion of the earnings multiple.
No, I think all those new orders that were flagged in that article is a good, solid underlying thing for the story.
Yeah.
But as you say, it's not something to make them explode higher. And I mean, if I had to do something, that to me would make some sense, because then you've got a few weeks for you to trade around it, because who knows the next headline, right?
Yeah. Right, let's stick in a really quick poll before we disappear. So Scotty and I are going to be replaced by Aaron and Axel shortly. But today's poll is, of course, NVIDIA results. What do you think the EPS is going to be, right? The all-important number. What do you think the EPS is going to be? Lower than 85, in line at 88, they're going to be a beat at 91, or they're going to smash it out the park at 95. So 84, 90, 92, or 95. We'll leave that with you. Into this break, Aaron and Axel will be with you shortly. Scotty's coming back with ESAR later.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hello, welcome back to the Trade Live with IG. So today we've got a battle of different styles here. So I'm joined with Axel Rudolph, and I'm Aaron Bright, and I guess we come at sort of investing and trading from slightly different perspectives.
We do indeed. I mean, my background used to be fundamentals, but when I started trading professionally, I actually looked at charts and haven't looked back for the last 30 plus years. So yes, my approach is 100% technical now. Yeah. So I look at what the news does to the market, but I'm not trying to anticipate what it's going to be. Yeah,
and I come at it from, my background has been purely fundamental, really, from my days of sort of an investment analyst, looking at sort of really long-term investments and looking at sort of very tactical tweaks to portfolios. But I think they've both got their place in, an investor's sort of toolkit or a trader's toolkit. Would you sort of agree with that?
I do, and I know quite a lot of investors who use both. Yeah. But some, as you say, just use fundamentals. Others just use technicals. Others just trade off flow. With regards to technical analysis, you could talk about anything. It could be behavioral finance, it could be pattern analysis, it could be trend analysis or momentum investing, which a lot of big houses do, even if they don't officially use technical analysis.
Absolutely. The hedge funds will certainly be touching upon this throughout their use of derivatives, I'm sure, even if they're looking at sort of things from sort of a global macro or even sort of maybe a special sits perspective. So yeah, obviously we've from a sort of macro perspective, there's been so much going on at the start of this year. We've had a rally at the start of the year. We've had then, tariffs coming in with Trump coming into power, tariffs potentially being cancelled or delayed. So markets have been extremely volatile, I guess, from both a technical and a fundamental perspective. Obviously, from a technical perspective, we saw a death cross, which is a famous a technical pattern. What exciting stuff are you seeing from the technicals at the moment?
Well, equity markets keep going up, which really surprises me, funnily enough, from a fundamental point of view.
Yeah.
Because my view is, fundamentally speaking, that we need to listen to people like Jamie Dimon. He's the CEO of the world's largest bank.
Yeah.
And if he's saying that everyone is complacent at the moment, maybe somebody should listen.
Well, totally. And from sort of the fundamental point of view, I agree. I think there's far too much exuberance. We don't know what's going to happen with regards to the tariffs. But if you look at all the famous hedge fund managers or just thought leadership throughout the industry, the likelihood of tariffs coming in and causing elevated inflation, being pushed up to a higher level, increased costs for businesses, and just a general poor economic atmosphere, it's quite high. And that's going to weigh on businesses' earnings and equity prices.
Totally. And let's not forget, even if Donald Trump does reverse some of his threats with regards to tariffs, a global 10% tariff is still huge. Yeah. And also, all this uncertainty doesn't allow companies to plan.
Of course.
So they're going to lay off staff, they're not going to invest, all of which is not going to be very conducive to creating more growth. So what we've seen so far, in my opinion, is that from a fundamental point of view, we've seen the data looking back, which hasn't really included tariffs as of yet. And we will see the start of this happening now in June.
Yeah, and that's a big issue, I think, with looking at things from sort of a pure fundamental macro point of view. I mean, you do have leading and lagging indicators, but a lot of the traditional ones are lagging. So you're looking at unemployment and just general sort of GDP data. The definition of a recession, which I'm sure many of our guests know, is 2 consecutive quarters of negative growth. I mean, that's obviously looking backwards. So it can sometimes be that you're actually in a recession for more than 6 months before you're actually confirmed to be in a recession. So yeah, that's, I guess, the negative of looking at pure fundamentals with this kind of thing. Yeah, so I mean, I'm quite intrigued, what sort of trades have you been talking about on some of these channels about how investors can sort of, I guess, capitalize these sort of exuberant markets, particularly from the equity point of view?
Well, as Rich has just said, what you could do is if you're into options, you could sell covered calls and thereby protect your portfolio. You could buy puts. The problem with buying puts is that basically you've got the time decay against you.
Absolutely.
And you might be right on your view and still lose money. So that's something you need to look at. Otherwise, basically, you could go short, but that's a tricky trade to do. And for trade of the week yesterday, I went long again in the Nasdaq because I'm giving up. I have to follow the trend. The trend is still bullish.
Yeah.
And Friday's sell-off, the fact that we've had these 1.5% plus declines and then back up again the same day.
Yesterday was 2%. I mean, in S&P. Yeah.
That is incredible. I mean, and we've seen more of these this year than we've ever seen before. And that's not bearish behavior. That's exuberance. That's people buying into it, mainly retail probably. But it'll be interesting to see what happens over the summer, because also what tends to happen is that you have sort of a loss of upside momentum. And we're starting to see that now with equity indices. And we'll see what NVIDIA does later on this evening.
Yes.
But if we start to see that sort of momentum just decline, then we could come to a tipping point. Plus, we're in a seasonal pattern where normally from May until sort of October to November, you tend to have underperformance with regards.
You get the age-old saying, "Sell in May and go away."
Yeah, some people don't believe in it, but it does work certain years quite spectacularly. Others, it doesn't really. But equity markets overall in the Western Hemisphere tend to underperform in that period of the year. So.
That saying actually came from the fact that it was too hot to go to the stock exchange, so people just sort of gave up many years ago, which I think is quite funny in the sort of I guess 1800s when it was really hot summer days. But yeah, you mentioned NVIDIA. I mean, I guess from a fundamental perspective, to touch on that, it's quite interesting because obviously we look at things like PE ratios, price to earnings or price to enterprise value, all these sort of fundamental data, what the sort of earnings of the company is doing. But it's quite interesting because NVIDIA's had quite successful earnings. Its PE, its price to earnings ratio, is actually below its 10-year average, which I find quite amusing because its 10-year average is around 55 times. It's trading at the moment, I think a few days ago, about 46, 47 times. But still, it's there's concerns over whether this whole AI trend is going to continue, who's going to be the beneficiaries, if there's competition from companies like DeepSeek, or if the technology is going to be widely available for other companies at cheaper costs. Then obviously that's not baked into this sort of data print that you're looking at. So it's not a silver bullet, things can change, but I think that's quite interesting for sort of fundamental investors to look at, to say, well, this is what it's trading at in terms of its multiples based on how the company's doing. If we look at the average, it looks fairly attractive, but it's obviously a very rudimentary, if you just look at it from that perspective, I would say.
Yes, I mean, and also if you look at the charts of NVIDIA, we can see here that we have broken through a downtrend line which had been in place since, I believe, early January. That was a very decisive break here. We gapped higher, closed above, and then we just shot up.
Yeah.
And then we've got this consolidation phase here. But, with yesterday's low, as long as you stay above there, the trend's your friend. And the trend's been pointing up ever since the US's so-called Liberation Day.
Yeah.
Well, a few days later. But yes, I mean, basically, as soon as Donald Trump removed his tariff threat.
I was looking at the chart yesterday, and we're up, I think, 17-18% from the absolute bottom of Liberation Day, which is
crazy.
It's like almost, like a huge bull market since then.
Exactly. It's like the COVID bull market. We saw this V-shaped reversal. But they tend to be actually quite rare. So that's why, personally, I, from a fundamental point of view, have been quite surprised. From a trading point of view, we looked at following the trend, and the medium-term trend up until the end of April was still bearish. And I remember being long the DAX, and then a few weeks later in Trade of the Week, we went short the DAX because I thought we were hitting all these resistance areas and we would come off again.
Yeah, and it made perfect sense.
It just kept on going. So I should have kept that long trade with hindsight, obviously. But it's all about, when you trade, it's all about where you place your stop losses, because nobody's going to be right all of the time. And whether you do that fundamentally or technically, it doesn't really matter. You need to have some sort of idea as where am I actually wrong.
Yeah.
On that note, I think the results of the poll is in.
Yes.
So,
do you want me to whistle
you go
through
for
those? So were NVIDIA results, are they expected to beat their earnings per share? We've got beat at 91, 38%, lower than 85, 26%, in line at 88, 23%, and smash it at 95, 11%. So a bit of a mixed bag there.
It's a nice market, isn't it? Buyers and sellers.
Yeah. Could certainly make a market out of those poll results. So, I think from those results, in terms of what we're looking at tonight with NVIDIA, from a fundamental perspective, I sort of touched upon it, but obviously, I think guidance is really important at the moment. I think more important than it has been for a number of years because of the uncertainty. And if we've got Jensen Huang coming out saying, I'm concerned about the state of what my business might look like in 6 months, 12 months, 18 months. You might get a rally you might get a strong EPS result, but you can still get a decline in the share price potentially.
Definitely. You could also get really good results, the share price rallying for a day or two, and then just running out of steam.
They digest the news, right?
Yes, yeah. So it could happen to the NASDAQ and the S&P. And that's what I say sort of when markets are starting to lose upside momentum, because there's nothing else driving the up move anymore. Everybody wanted to buy, is now long, has bought. So that is a possibility. We'll have to see. If you go on the IG platform, you look at tip ranks, you can see that the analyst at the moment still rated obviously as a strong buy. We've got 32 buys and 4 holds, but 1 sell. So that's interesting. Some analyst or one person is very courageous here. And if you look at the smart score they have, where they sort of combine some fundamentals, technicals, etc., that is now down to a 6, a neutral. So it's interesting. But yes, the trend is your friend, and if you look at the chart, the NVIDIA share price is now approaching this resistance area, going back to the highs seen in mid-February. If we take those out after earnings, we're heading back up towards the highs seen in January and December of last year. So
it was sort of all-time high level.
Exactly. So yes, so that's another scenario which may well happen. We could see. Because after all, we're not that far away from all-time highs.
Even in just index and DAX.
Exactly.
Yeah.
So DAX is doing all the time anyway. And DAX, that's the funny thing, is the economy's actually not doing very great. It hasn't done great. We went in a recession for 2 years.
Yeah.
Yet we're making all-time highs because all the money is flowing from the US into Europe and the German stock market.
And the huge amount of, I guess, European defence stocks rallying as well. That's obviously played a little bit of a role.
Definitely.
Yeah.
But if you look at the US indices, we could have another 5 or 6% rally. I think one of the investment banks said it this week. I can't remember which one, but
yeah, we're at 5,900, I believe, the S&P.
Yeah, and then basically you make an all-time high. Everybody thinks, well, everything's great, no problem whatsoever. Here we are on the S&P.
From a fundamental point of view, this could be argued that you're almost papering over the cracks of what is potentially a dodgy economy underneath.
Potentially, exactly, yes. But that would be a scenario which would suck everybody in. Imagine us making all-time highs in the US, even though we've got this huge debt problem, because let's not forget about that.
Oh, absolutely.
And then people think, well, tariffs, debt problem, not a problem. All-time highs, I'm going to buy. And that's where everybody gets sucked into this trade, and then suddenly we get it, a decline because the data deteriorates.
And that was the classic 08 thing. Classic 2000s, people want to clamor in. It's classic behavioral finance at its best, really, or at its worst if you happen to be one of those investors. But really, really interesting scenario potentially panning out. And we've obviously got geopolitical concerns with Ukraine, the Middle East, things like that. If there's going to be escalation with tensions between China and the US, a lot to look out for this year, which will affect, I think, both fundamentals and to an extent technicals as well.
Definitely. The advantage with technicals is that, look here, for example, if you look at the S&P 500, we've been going up in a series of higher highs and higher lows. That's the definition of an uptrend. So basically, as long as we stay above the lows we made on Friday, which were because Donald Trump once again said 50% tariffs on Europe, and then, you know, on the 1st of June, and now is saying, I think the 9th of July, we have a bit more time. But that low is the last line in the sand, basically, because that's the last reaction low from where we are going up again. So if we were to fall through here, we could see a more pronounced correction. It doesn't mean that we're going to go back down all the way and retest the lows, which, to be honest, is something
So that would scare you. We get a retracement of that red. That
not necessarily scare me longer term, but short term, I do think in that scenario we could go back down again towards 5,600, 5,550. The question then is, are we going to hold there? And how quickly are we going to get there? Because charts, what you have to look at also is the momentum. If it suddenly picks up, like we saw, you know, at the beginning of April, these big red candles going down, that's when you get scared. That's when you get worried.
It's I guess it's sort of herd-like behavior, right?
Yes, definitely.
People just will, you know, they just will follow the trend. If there's fear, people will just run, and if they want to, you know, see the buying opportunity, they'll, you know, try and clamor in to try and get a slice of the pie, really.
Yeah. So the question now is, and if you're not long, do you want to go long now? I think from a technical perspective, you can still do so, but you have to have your stop below Friday's low.
And from a fundamental perspective, I mean, I've had this discussion with sort of other portfolio managers. People are finding it difficult, who are in decision-making roles at portfolio management firms or investment firms, to go long, you know, equities in general, just because the uncertainty is, even though this was a few weeks ago, I was having these conversations where equities weren't as high as they were now. And even at those levels, people were saying, well, I just don't know what's going to happen. It's difficult, you know, things can change so rapidly. It's that policy uncertainty, which we haven't had, I mean, since Trump was last in power. And that it can affect stocks hugely. But not only can it affect stocks sort of in this intraday basis, but if those tariffs come in, I mean, the potential for long-term economic issues or an economic decline or earnings to fall from these companies is elevated. And that's why people were sort of looking at things like gold, alternative assets, and sort of short duration bonds, really.
Yes, no, exactly. And if you look at gold, I mean, it's doing sort of the inverse. But again, a lot of people are quite surprised that the gold price is not coming off further, because after all, equity markets are going up. And yes, we had this correction, but can you see we still have a very clear uptrend in place?
Yeah, massive. I mean, it's you know, I actually looked at a chart recently of I think it was gold miners. So there is built-in leverage to these companies, but against the S&P 500, I think over 20 years. And given the rally that we saw, I mean, this is obviously pre the rally that we've seen, the recent rally that we've seen in US equities. Gold miners had actually outperformed the S&P 500 over a 20-year period, which is crazy, because it went through so many periods of just doing nothing, going sideways. But the rally, it just shows how exceptional this rally has been for the past sort of 18 months, 2 years.
And we still have more central bank buying also pushing the price higher, because basically what a lot of countries are now focusing on is perhaps moving in the future away from the US dollar because of all this uncertainty, and therefore going into you know, safer assets such as gold, for example.
Totally. And you've got the geopolitical concerns, which gold always seems to do well if there's you know, any form of warfare. People like to have something which I guess is physical and has got this historic value from Roman times, I guess you could say. We were chatting earlier and you mentioned cable. Really keen to get your views on that and sort of the trend going on there.
We went long for Trade of the Week last week, I think. You can see here, this is the weekly chart. So we caught this lovely up move here quite nicely. We went, I think, long at 133.60, simply because it was just a retracement in the trend. You know, people quite often, they think, oh, I'm going to sell into each retracement. No, you want to buy the dip in the direction of the trend, whether that trend is down, in that case you're selling the bounce, but if it's going up, you're buying the dip. And you can see here we hit 2.25 year highs going back to, I believe it was February 2022 now.
Yeah.
And
we've got a huge weakening of the dollar. I mean, from 22, 23, that sort of period.
Definitely. And this morning, and some people were concerned again because the dollar strengthened slightly and cable came off. But can you see here, we more or less tested these previous highs, which now act as support, but the trend's still in place. So I wouldn't be surprised if we were to hit my upside target medium term was sort of 138.50, 139.
Oh wow, really quite high. Yeah.
Yes, well, because there was a cluster of previous resistance where it traded for about a month or two, a couple of years ago. But my view on this one, medium term, is wrong. If we go below the, I think it's the mid May low here down here, but that's a long way away, sort of 130, 140. But you can see again, we had what? 5, 6, 7, 8 days of consecutive higher highs. That is bullish price behavior. And it's normal to just consolidate a little bit and then it just continues.
And I think from sort of fundamental perspective, even though currency management isn't a huge part of our portfolio strategy, we do engage in some hedging. You're seeing dollar weakness, I think, in general. I mean, you've seen the yen up 8% this year. I think money's being repatriated back to Japan as the carry trade is reversal. So I think you're just seeing general dollar weakness as a result of, well, I think just there's sort of a rejection of the US. You've seen bond yields go up, and I think people are just concerned about the sustainability of the US debt and how the US is going to manage, especially given the fact that it passed a bill this week, which just with a huge raft of tax cuts, which is great for everyday man or woman in America, but it adds a huge debt burden potentially over time.
It definitely does, and it's something to discuss next time around, because I think we've been told to wrap now. But yes,
Brilliant.
definitely.
Good to chat.
Good to chat. Thanks, Aaron. Thanks for watching.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy. Welcome back. We've got these all sessions. God, I'm looking almost as pale as Aaron. We turned up the lights in here or something.
Seems brighter.
Right, we're straight in there. We've got the American markets open, so let's see how they are doing. Scotty, run us through those the top movers there.
Yeah, there's quite a mixed bag there. We've got some of the farmers, airlines, the telcos. Interesting to see Tesla. It's been on such a strong move higher of late. That's been one of the leading charts we've been looking at over the last few weeks. Just it seems to defy every critic out there. Andy as well. That's on a bit of a rescue mission. That's starting to rally back up. And then to see the farmers. I mean, as I said to Rich earlier on, it's really broad based to see the Russell even outperforming. So the breadth is back in the US market. You can just see from these moves, there's almost a representation for pretty much every sector in there. You can't see a lot of a sector theme, just a general markup higher.
Right, let's see the but you got to say there's not any big moves, nothing up or down more than 1%.
Yeah.
Clearly everybody waiting for the big one tonight.
It's not giving us a lot to talk about it. Interesting, just see the bond ETF has just softened a little. We spoke about the move in Japan today on the 40-year auction being weak and the Nikkei selling off. So I would probably just at the margin, just keep that in the corner of your screen or just have a little check on that. But yeah, I mean, Home Depot, that's been a bit of a wonder. You've seen a much better move lately from Walmart and then a big rally from Target after poor numbers last week. So Home Depot just drifting.
And big day for Nike yesterday. Nike up
massive
4.
move, yeah, 4.5%. Well, yeah, that's actually been a slow grind. It feels like it's being brought higher,
yeah,
rather than leading higher. If you actually look at sort of a 6-month chart of it after it's got crushed for so long, it does feel like it's playing a catch-up trade rather than it's about to do or has done something that's a game changer.
Yeah, there's potential. Do we get some kind of strategy update in the next set of numbers? Do they sell Converse? Is there something there for people to get their teeth into? But I agree. I don't think they're going to be a great set of numbers.
No, certainly not.
Right, let's look at tier 2. These are the more risky ones, well, in my mind. Yeah, we got Reddit up there, small, Virgin Galactic. But what do we have on the downside? Riot Blockchain, Alibaba, and the old MicroStrategy.
Yeah, exactly. Yeah, some of those Asian tech names have just run out of a bit of steam of late as well. I mean, if you look at a simple proxy for me is the Hong Kong 50 because it's a nice broad index. That's really been stalling around the higher levels. So yeah, that doesn't surprise me just to see a little bit of weakness in some of those names like Alibaba.
Great. Right, we've got Esar and Scotty coming up on the psychology of trading.
Goodness me.
The man with the most experience in the world, 37 years. 37 years. And Esar, of course, with all his incredible knowledge on psychology and how that can be brought into trading as well. So I'm excited to watch this one.
Yeah, be very interesting.
Very interesting indeed. One quick thing I was searching for a trade there on NVIDIA. However, maybe I'm looking at the wrong thing. Maybe I should be looking at the market. And if we can just quickly get up the S&P 500 options chain, right? And let's go to the weeklies, because of course the dailies won't take in the NVIDIA numbers. Let's go to the weeklies on the 30th of May, that's Friday. And you can see here, I'm just wondering, if you get a poor set of numbers from NVIDIA, what is the market down? Let's say NVIDIA's down 10, Scotty. What does the S&P go down by Friday?
So I would imagine you would probably get, quick calculation, I mean, that's probably worth, what, 1% of the S&P NVIDIA, something like that?
Yeah.
And then if that's a bit of a leader for psychology and tech, which has led some of the bounce again, then that could definitely help. But then you got the PCE Friday. Is that 130 or 3?
Yeah, good question. But yeah, either.
Yeah. So
most
yeah,
likely 130.
Yeah, I think what's been interesting is that we've seen a trend of late that for the market where softer data is generally negative, but the harder data comes in better. I did see a great stat from a gentleman we've already mentioned this morning, John Authors on Bloomberg, where statistically people's perception of inflation outlooks generally overshoots what the actual number comes in at.
True. Yeah.
So I wouldn't necessarily rely on the PCE to push things down, but
Okay,
I think
so we're
certainly
talking
NVIDIA. I mean,
1
if
to
the tech
2%.
space I think if the tech space, starts rolling over on NVIDIA.
Okay, so that takes us to 2% takes us down to 57.75. So what I'm going to do is I'm going to buy one of these puts, and I'll do that in $30 a point. I'm paying 16 ticks for that, right? So I'm spending $500 on buying a put for Friday at the 5,850 level. However, that's 16 ticks. I am going to cheapen that by going 2% lower than the current market price and selling 2 of those. In fact, I might go let's go 1 tick lower. Yeah, 5,770, and I'm going to sell double the size. So I'm selling $60 a point of that, and that gives me a complete return of 9.2. So 16.6 minus 9.2 is about 7-ish, yeah.
Yeah, 7,
So that is 80 points of downside, and I'm paying 7 ticks for it. So that's just a little thing to have in mind. Now, if the market goes down more than 4%, of course, you're in trouble because you are long, because you've done double the size. But that is my little play for just in case NVIDIA numbers are weak. Right, I'll leave you to it. We'll see you in a quick 2 minutes. As Isar
Watch
takes
Trade
my
Live
place.
with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between 2 similar stocks rather than taking a view on the market as a whole.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal. And I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach. And I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Hello, welcome everyone. I'm here with Scott.
Hey,
Do you prefer Scott or Scotty? Or
Scotty is what I'm used
Scotty?
to.
Okay,
for,
well, I'm here with Scotty.
Decades, yeah.
Yeah. I'm here with an absolute pro. So he's going to be sharing some tips on the psychology of trading. I think, so today, we were talking about it actually just before the show started. I wanted to talk about volatility, but actually we spent a lot of time talking about how you respond, like, in the height of the chaos and the volatility. What I wanted to talk a little bit about is how do you think about the period after that initial spike in volatility has started to die down, and where you're kind of worried there might be subsequent spikes, but at the same time your behavior is still, you might have been burned from the first wave. Like, how do you even think about behaving in that kind of context? So I guess one of the psychology phenomena that we were talking about is this idea of like hypervigilance, which is this idea that after a stressful period, you tend to be on the alert for future potential stressful periods in a way that might be maladaptive. And so you might find, for example, you're really looking for catalysts where there might not be catalysts. You're kind of chasing ghosts, as psychologists sometimes call it. But at the same time, like, it's not obvious that there's only going to be one volatility spike, and so some of that behavior might be rational. And so I guess I know you are doing some coaching with some retail traders.
Yeah.
Like, is this something you've noticed either in yourself or in others that you've spoken to?
Certainly, it's a combination of, as you say, it's that hypervigilance and almost feeling as if you should want to be involved, or that you need to be involved to validate your own sort of role as a trader, if you like. I mean, having worked,
activity feels good and lack of activity
exactly, that's right. But then in the aftermath, once things calm down, that activity is generally at best neutral, if not unprofitable. So then you actually feel worse for falling into that trap.
But then, once you've made a loss, then because of like prospect theory, we know that your loss is way more heavily than gains.
That's
so
right.
Then people feel the need to try and win back the money, and then that leads to even worse decisions, and it can lead to a bit of a spiral.
Yeah.
So I think that that totally resonates, and it feels like something where, I don't know, I think when I'm personally trading my portfolio, I can feel myself falling into some of these traps, even as someone who's like hyper aware of all of these biases.
Yeah, of course.
And it's like, it's interesting to me. I think there's no amount of inoculation that can take the emotion away. No. You just have to be aware of it.
Yeah.
When you're
absolutely. I do think that, as we mentioned as well in the chat that we had, I think because you're effectively alone, even though you could be sitting here on a trading floor at IG with 30 other people.
Yeah.
You feel alone. So that's always the backstop of, if you work in an institution like Rich and I did.
Yeah.
That you can almost kind of share the pain. You know, shared pain makes you feel, makes you feel better. But it's also
I guess you're talking literally about positions with people.
That's correct.
And that process of like thinking out loud forces you to have much more deliberate.
It's absolutely huge. Yeah. It's absolutely huge. It really, really is. And yeah, since I moved into the retail space, I mean, I signed for DND last year, and it's been a real difficult sort of transition because your institutional habits are of no real benefit at all, either to yourself or to some of the guys that you're trying to help and coach. And so therefore I almost have to forget a lot of ways I used to behave.
Like almost relearn.
Yeah, and also as well, a lot of the things I've learned now in the last year or so, I wish I could kind of move back in time and apply them, because the thing is...
What is maybe an example of that?
So I think actually having a plan every day, because I think if you work in a large franchise organisation like an IB, you might have a set plan. Yeah. But say a minute after the market opens, a client might wish to do something, and then all of a sudden that plan goes out the window. So the best traders that I've worked with have generally been able to stick to a plan even through times of turbulence. Yeah. So I definitely think like the pre-prep, and that's why a lot of the time at investment banks, you show up at 6 a.m, so you're a couple of hours before the market, just to get your thoughts in the right place.
Well, I think the other thing is, if you're thinking about that over trading behavior, having a plan is like a key preventative factor to stop you feeling like, okay, I'm doing fewer trades today, but I'm doing fewer trades because that's the plan, and here's why, and here's that why that's going to benefit.
Absolutely.
I think that's really key, right? Yeah.
No, it really is. And things about your position sizing, and even you can even, if you're struggling with a desire to overtrade. I saw a great piece where it said almost if you're really battling to not trade, and I know the phrase is sit on your hands, but even if you can't literally do that, you're almost better if you can bring yourself to just record trades for a week and not actually transact, but just record trades for a week, let a week pass you by, and then just realize that it's another week and more trades are going to come along, because there's such a desire to think this is the last chance I will have to be long X or short Y and so on and so forth.
That's interesting. That's interesting because I do think there's an element of which, if you overtrade, it's very hard to get out of that cycle, because you're continuing to train your brain on the fact that like you need to be constantly active. We spoke about overtrading maybe 2 or 3 weeks ago, and we actually had quite a few people reach out and say that it's something that they struggle with a lot, in part also because when you have volatile periods, you're trading off a few things. You're trading off like the heightened emotion from the fact that it's like you might be taking a P&L hit, or there's just a lot going on, with the fact that actually, because there's more volatility, you are also seeing lots of opportunities, and it's very hard to discount the opportunities you're seeing right in front of you, which might be small, but they are real and they're right in front of you, versus the hypothetical opportunities you have from keeping some powder dry. And like actually that opportunity cost, like people tend to discount the optionality versus the thing that's right in front of them, and that's one of the contributing factors to overtrading. Is that something you think you've seen, or something you've
absolutely? And I think you almost can't resist. I think overtrading leads into revenge trading and all the negative things that we try to tell people. But sometimes as well, you can also let yourself have a bit of a break, and you can even switch asset classes. So obviously, because of my background, I trade stocks most of the time, but half my problem is because I have an expectation, or I think I know what should happen or what's going to happen. That's as bad as actually any other poor habit, whereby you almost have to empty your mind and just say, okay, what is this price action here telling me? Make sure you got your time frames on the right settings for your time that you're trying to trade. And even look, there's always an asset with a strong trend which makes sense. So it might be the gold price. So if you're a stock trader, you're trying to trade some of the proxy moves around headlines and noise, you will never catch the right move at the right time on a headline. Maybe one time in 1,000, and you might find yourself on the right side of a headline.
And that's more luck than skill, right?
Of course. And the amount of traders, I've said to Rich, he would say to you if he was here, the amount of traders in big investment banks who can't resist having a position before the non-farm payroll, 15 seconds, right? Honestly, you would be amazed at the people. And as much as you tell them it's always a fade, so maybe you should move. So if you're finding it hard in stocks, maybe move into indices because they're much lower volatility. Or you
I guess you get the fresh perspective when you're seeing that asset class.
Exactly. Or you can move into FX. I mean, FX at the moment, it's got some really nice trends. Rich and I a little while ago were sitting looking at the sterling chart. Now sitting here and looking at the press, it makes no sense that sterling is stronger. But it is. So it's almost a case of identifying. So you sometimes have to move. It's almost like an altitude thing. So if looking at stocks is, say, 1,000 feet above the ground, sometimes if you move up to 10,000,
suddenly you see different things.
You can see different things, and you can still trade what's going on in the world, because I think that's what attracts people to trading. You're expressing your view of what you think about the world, or you think about a company or a sector via trading, but you can still do that, but with a less volatile set of assets.
No, it totally makes sense. I'm hearing from the studio, we actually have some questions as well. So I know there's one in the chat, which is, any idea on what percentage of portfolio to invest in one theme? I think on this point of trying to think about different themes. Like,
absolutely.
My gut feel, Arsax, is that like you need to think about what, as a trader, your comfort level is, both with risk and with familiarity with different positions. So if you're someone who trades equity a lot, I wouldn't be surprised if equities were a larger share of your trading portfolio
Yeah, absolutely.
I think that's
Absolutely.
entirely rational.
Yeah, absolutely.
But I think a little bit of a mix probably does make sense, and the ability to flex based on context.
Yeah, I think the first way I would address that question is be truthful to yourself and say, what is the time frame you're talking about?
100%. Yeah.
Because if you're throwing multiple time frame ideas into a bucket and you're calling it a portfolio, it's really not.
It's just like a loose series of
have
decisions, right? Yeah.
Yeah, I mean, look, have multiple ones. If you really like the US, have 75% of your portfolio or 80% of your portfolio in the S&P ETF, because whatever theme you think will play out in the market, because of how indices work.
Yeah.
So in the Mag 7, 3-4 years ago, everyone was like, yeah, I've got no idea what they are, and now everyone talks about it. But the index has been adjusted to reflect that growth in a theme. So you almost let the market...
So you're almost just betting on the US rather than...
That's correct.
Yeah.
But if there's a theme that's emerging in there, which you haven't necessarily thought about, the index will do some of your work for you. So if you're seeing these adjustments in indices, and that might alert you to themes, or it might suit you to have something that you just look at once a month.
It's interesting. I'm primarily like a medium-term macro regime trader, and I almost exclusively trade either major commodities or like basically futures on ETFs and options on futures on ETFs. And
absolutely.
like that's where my familiarity is, and so if I was to look at my portfolio from a risk management perspective, it's not great because it's not very diversified in types of assets, but they're assets that I understand really well.
That's the key.
Like, it's not many positions actually. So I think there's this feeling that diversification often has to be lots and lots of positions. I actually think you're much better off having fewer uncorrelated positions, all of which that you understand very well and have a clear entry and exit plan with, than like 60 positions that you don't know what your plan is going to be.
Yeah, 100%.
And it depends a little bit trader to trader, but like that, I'm 100% with you, I think.
Yeah, absolutely. And I think the thing about themes is that you could say, okay, I'm long the Mag 7 because it's AI, it's tech. But again, in the Mag 7, you still got Tesla, which is it a car company?
Or
is
Netflix,
it a defense
right?
company? Exactly, that's right. And so I think someone said to me years ago, it was a salesman at Merrill Lynch. Phil Donald, his name was. Very esteemed.
For a little while I worked at Merrill Lynch. Very.
Right, okay. So he said something in a note about 15 years ago. He said, if you want to know what single stocks to invest in, invest in your most frequently used apps on your iPhone.
I mean, it makes sense. Open up your phone and see the apps.
Yeah, absolutely. But I think as a percentage of a portfolio, I think more than 10%, then suddenly you're entering into the realms of it's becoming your portfolio. And let's say, for argument's sake, you go to 10%, you could still have space for 5 ideas within a theme. It might not be the same drivers of a theme, but again, do you want to manage 5 stocks? Because all these companies are run by people, affected by people. So if you look at NVIDIA, now it's behaving like a utility almost.
Yeah, and actually, like, NVIDIA earnings are now such a big deal. They are like index move. I mean, you and Rich were literally looking at the S&P and like we've got a single earnings this week that might move the S&P 2%.
I mean, if you got, I don't know many companies where a group of people throw earnings parties. I mean, I think it's great.
Crazy, right?
Yeah, it is a great idea. So yeah, I think that managing a portfolio, you really do almost have to manage perhaps 2.
Yeah.
So you just have a long-term one that you forget about.
Well, that's exactly what. So my investment account is like totally separate from my trading account.
Yeah, that's right.
I look at it on a different type.
And there's nothing wrong having NVIDIA in an investment account and a trading account.
Yeah.
Because you can still trade around. So if you had Axel on, you could still be trading short-term sell-offs in a longer-term uptrend.
Yeah.
It's just a case of really being clear in your mind what you're trying to achieve, what your time scale is.
How and why, right?
Exactly, how and why. And just have some real strong price levels in mind. A lot of people don't generally have a price level in mind. They'll look at a chart and the thing about a chart is a price is the confluence of sellers and buyers.
Yeah. And also like events will happen that materially change the appetite of those sellers and buyers, and often those events are very hard to forecast, right? And I think
it looks like we've got a little bit of a follow-up actually from the same.
I have a good percentage in different stocks in defense, across US DAX and UK. They're doing well, so FOMO that I could have invested more, but reluctant and not sure about overall percentage in defense. So that's talking about sector exposure.
Yeah.
And then I think this FOMO thing is definitely real. Like we've seen in the past, especially when you have run-ups, retail traders really feeling bad that they weren't as invested as they could be. But actually, if you were to ask them at the time, they already felt like maybe their risk exposure was high. Like I think what we saw in April, where you had this pullback, everyone was very, very worried about their exposure. And you ask them now about the like bounce and the V, like a lot of them are like, wow, I wish I bought more at the dip. When if you just transport yourself mentally to where they were.
Exactly, it's when you're in the moment. I think though that's a great point about that, where FOMO is really painful.
Yeah.
But again,
it just sucks, right? It just feels awful, right? Yeah.
It's the worst. But also as well, if you're telling yourself, right, why am I investing in defence?
Yeah.
Obviously, it feels like as if the world is a less safe place. Lots of countries are now starting to up the defence budget. So the methodology,
I guess the balance of the US versus the non-US.
Absolutely. And the methodology makes perfect sense. But if you're talking about a 5-year time frame on this idea, then
it should be almost in your investment account.
Yeah, absolutely. And you could almost say, so on the funds that you might not have invested in those stocks that you want, what are you doing with them right now? Yeah, of course, always, exactly, always. But again, that's about having, once you get beyond, it's the same as if you sit at an investment bank and if you run positions.
Yeah.
If you've got more than 5 stocks you're trying to watch, you can't. So
well, I guess exactly the quality of decisions will start.
It's the quality of the decision. So about the defence stocks, I think the thing is to say, well, what you're doing in the meantime with those funds, are they at least sitting in a money market fund or short-term treasury bills?
Still is paying pretty well.
That's correct. That's correct. It's still paying well. And then just say to yourself, right, okay, in these stocks, at what level in these do I want to look at them again? Not necessarily get back in.
Yeah.
What level would I like to look at them again?
I suspect then you're likely to do the opposite of what you would do in a FOMO kind of situation, which is you're waiting for the pullbacks to buy more, as opposed to trying to like chase the momentum because your time horizon is much longer.
Absolutely. It's the same as Axel was saying earlier on the charts, where you start chasing them, you generally have a negative effect in your face. So as long as the money you haven't invested is sitting somewhere, making you something, then just have some alerts, and you can have a few alerts. I've seen the IG front end, I use it myself, right? You can set yourself alerts. And even if you want to add a little more on a breakout, but make sure it's a proper breakout where you've studied what the potentials are, especially if things are making new highs. FOMO feels even more real. Right, if something's making new highs. So again,
and you see the news articles that it just like doubles down.
Listen, absolutely. And you can set yourself loads of alerts, not too many, but set them far enough apart that you're not having to look at these stocks all the time. And unfortunately, FOMO, if there was a cure for FOMO, and if it was, sold over the counter,
we'd make loads of money.
Yeah, if you could sell it in boots, you'd make a fortune. And you're absolutely. I think that last point about far too few and far too many of raising up and down. Again, that's just risk management. I know it's something that we bang on about all the time.
But I think especially in like those periods of volatility where I think it's really important to think about position size, it's really important to think about exit plans. So I guess if I was to like wrap up, because I'm conscious we're near the end of the segment, I think what I'm hearing is during those periods where volatility has spiked and maybe even come down a little bit, having a clear plan is really important. Thinking about position size is really important. Thinking about the number of positions you're comfortable managing at the same time is really important. And then one thing that we haven't spoken about a lot, but I know I suspect you would probably think the same, and something we've spoken about on the show is also maybe even having a trading journal where you walk through the thinking of why you put a position in.
Absolutely.
So that you can have the benefit of that.
And how you felt at the time.
Exactly.
That's the other part of the journal. If you don't record how you feel before and after putting the position on, that won't give you the full amount of information that you actually need.
Yeah, and like, look, I think it's very normal to feel that hypervigilance we spoke about. And I think a lot of these things are just protective factors to try and not make some of that over influence your decisions. And it's worth just being aware that like a lot of this is stuff that no matter what you know and how experienced you are, you still feel the same way. Like,
of course,
I was already checking the 40-year Japanese government bond auctions this morning as if it might be a catalyst that really mattered.
No, of course. Like, listen,
yeah.
narratives change with frightening frequency at the moment.
Yeah, right. And it's like when you've got events like NVIDIA earnings, like that is likely to be a catalyst in either direction, and it's worth just trying to balance that with the awareness of like we're all human beings, right? We all have to manage our risk.
Yeah, I completely agree.
Cool.
There's one last question here about thoughts on AI and chip manufacturers. I think this evening's NVIDIA numbers, again, we've almost hammered the topic to exhaustion. But if you can take from NVIDIA how arguably, the company in that space are going to manage looking forward and what the outlook is, that will probably give you the best
for sure. And I think
look forward rather than attempt to guess, I think.
100%. And I think it's also interesting in a point like NVIDIA earnings to then look at people like ASML or TSMC and see how they're responding to the demand forecasts. And I think the sensitivity of the kind of AI chip enablers to the chip manufacturer demand, I think that also tells you a huge amount of information that we won't know until those earnings.
Completely agree.
Cool. Well, thank you so much, guys, and thanks for tuning in to Psychology of Trading. I am going to love you and leave you, and I think, Scotty, you're still sticking around, right? Or no, you're heading off as well?
But Rich just loves to surprise me, so...
Oh, no, we are done with you for today.
No, we're done for today, so yeah, I'm sorry about that, but hopefully I might be back someday.
Okay, well, we have an interview up next, so whilst it's not with the amazing Scotty, you guys will have an absolute fascinating segment to come. He's back Friday as well, so...
Oh, there we go,
we'll see him soon.
Fantastic.
Thanks, everyone.
Thanks, guys. Cheers.
Hey, welcome back. And we are joined by Brendan Ahan, CIO at Crane Shares. Brendan, good to see you, especially since you've been traveling everywhere around the globe. How are you doing?
I'm doing great, Angelina. How are you? How's everything in London?
It's been great. I mean, like, the April madness on the markets the last 2 weeks, and then the sudden boom comeback, the bounce as well, which happened so quickly, it makes for a lot of volatility, and it's been great, interesting for us.
Yeah, I mean, it's something else. And certainly, we're seeing this dramatic rise in yields in both Japan, where since mid-September of 2024, the 30-year Japanese government bond has gone from about 2% to just a touch below 3% today. And similarly with the here in the U.S. 30-year Treasury bond, we've seen almost an equally as dramatic of a move where yields have really risen from just under 4% in mid-September of last year to just over 5%, this morning.
Yeah, which side of the camp are you on? Is this something that, concerns you? Or do you think it's just a slap on the hand, from markets, wake-up call for the U.S. government, and actually it'll recalibrate itself again, and then it gets kicked down the road?
Yeah, it's interesting because it reminds me of James Carville's very famous quote about being reincarnated as the bond market, that you can intimidate anybody, and I think government bond yields are really one of the only things that could suppress the insatiable spending from the U.S. government. At the same time, I think some of the tariff policies have really rubbed a lot of the traditional buyers of U.S. Treasuries. So I don't think we should expect Japanese and Chinese, as well as other foreign buyers, to come to the rescue because, arguably maybe they've been offended by the way they've been treated during this tariff negotiation. And I think that's something that, I've experienced in recent travels in Europe, in Asia, but also then traveling down to Washington, D.C., and I really don't see any. It's bipartisan, this spending, and I don't see how that stops anytime soon.
What is the mood like in D.C., given you've been traveling there in a time when, we saw weak demand for that $16 billion sale of 20-year bonds?
Yeah. I mean, I think you have a little bit of the art of the deal that President Trump is going to negotiate from starting with a very hard stance, and that ensuing chaos is very difficult for rational people. But we're starting to see that pivot to the next stage, which is negotiation, and I think you're seeing that negotiation stage. But at the same time, I think from a Congress perspective, there's just this insatiable appetite to spend, and it's really hard. No one's going to tap the brakes there. It's bipartisan, and so I think the bond market, this move, which is really going to weigh on risk assets, particularly those here in the U.S. I think it's hard to see anyone stopping that. I really came away with a little bit of disconcerted about the views of kind of this spending policy. At the same time, speaking to members of Congress just about China, the views were very, very negative, and that's despite U.S. multinationals do 1.1 trillion of revenue in China today. There seemed to be just almost I call it almost a China McCarthyism in D.C. The view was almost toxic, is how I describe it.
Oh, dear me. And from the viewpoint that you have as well, for those of you that have not seen Brendan here on Trade Live with IG before, Brendan, of course, an ETF industry pioneer, a China market expert as well, and you have a very privileged viewpoint from, with your work at Crane Shares, because you travel in between, travel to all these places in China and the US predominantly, and you see the changes in real time. Let's talk about how we trade this, because our viewers who watch us use the IG platform and they take positions, and they're very, very sensitive to these political changes. And those that have seen the repatriation of assets from the US to Europe, to some extent, Germany still holding up really well, FTSE as well. Is this likely to continue?
I think so. I think there's about 17 trillion of foreign capital invested in U.S. equities, and I don't think, I'm not saying that's going to zero. I'm just saying some element of that is coming out, and some of that is for national pride reasons. That as we saw in Canada, the reaction to U.S. trade policy, led to Mark Carney being elected, and in Australia we're seeing something similar play out. And I think in Europe, there was the sense that there was people were offended by how they were treated. These are allies, and even I think that gives people the excuse to, based on high valuations and U.S. equities, political instability here in the U.S., this growing debt situation. In Asia, the view is a little more nuanced. I think it was less maybe about national pride than it was about this valuation disparity, and really about DeepSeek. That I think DeepSeek really showed that U.S. technology, trading at 40 times sales versus China tech at 14 times next year's earnings. People were just saying, golly, maybe I should just rebalance my portfolio and buy some of this cheap China tech by selling some expensive U.S. tech. And I would expect that this isn't the end of American exceptionalism. I just think it's the rediscover of diversification.
Right. And we are certainly seeing that diversification whacking up the Germany 40. This is a longer term view here at Trader Friends. Also showing you the FTSE, because we have seen the FTSE benefit from some of this, as Brendan put it, rediscovery there. The question is, how long is this going to last? And also, the fact of the matter is, as we try and help our Trader Friends discover other assets, I know you've been to China a lot, and one of the themes that you still like very much, you talked about DeepSeek over there. I was here when all that kind of broke out. Alibaba, 10 cents. These names, are they still on your watch list? Are you still bullish on these, even more so after what we've seen so far?
Yeah, I think if anything, as we're going through earnings season and you're starting to see some of the stimulus that the Chinese government's really been implementing over the last year, it's starting to filter into the economy. I mean, certainly, I do think China wants to, the Chinese government will want to save, do a trade deal with President Trump, because in China, the number one issue is the real estate. China is not nearly as geared to the U.S. economy as I think many of those in Washington, D.C. The main issue from being in China is the real estate crisis. And certainly that's why they want to get the trade deal done with the U.S. in order to pivot this issue that's really weighed on consumer confidence as well as domestic consumption. But net, at the end of the day, the world's second largest economy, the Chinese government is cutting interest rates. They're stimulating their economy. And I think you've got this potential catalyst playing out, this re-rating of Chinese equities. It's starting to happen. It's been happening really since January of 2024. And I think it's not nearly as recognized as many out there would recognize this uptrend that's playing out.
We've seen some of this bank recapitalization as well. You've just come from there. Are we seeing, Brendan, more of this enhancement of liquidity there?
Oh, for sure. I mean, the PBOC just cut the loan prime rate, which the 5-year loan prime rate is what mortgages are based off. Again, this is geared to trying to benefit the real estate market, which has really come down dramatically. But again, there's expectations for further interest rate cuts, further easing of bank reserve requirement ratios. Again, these are all things that show the seriousness that the Chinese government is placing on revitalizing their economy. And again, it's not because of the trade war. China is far less dependent on trade in general. It's only about 19% of GDP, down from 36% 20 years ago. And then the U.S. is only 15% of that. So again, we estimate it's about less than 3% of China's GDP is geared to exports going to the United States. I think far less than many people realize.
Now, the strategic shift as well, I gotta ask you this because, I want to know how serious they are. China's made sounds, Brendan, that it wants to, in this pivotal period, to change the consumption. So it's driven more by domestic consumption. They then start to rely less on exports to the US, right? How serious and how much of this has been put into place, or is it just still lip service?
Yeah, I mean, big picture, what they've been doing is providing consumption subsidies for areas like auto, which obviously includes electric vehicle and hybrid. They've expanded that to home appliances. And more recently, they've expanded these subsidies to electronics. Now, part of that obviously is to raise domestic consumption to alleviate what would have been made potentially exported. But there's another reason, which is those industries employ a lot of people. We read a lot about BYD, the big electric vehicle company, and having met the company, they would always say, listen, we do a ton in hybrid as well. But BYD employs 700,000 people in China. And so as more and more Chinese go out and buy these great vehicles, and having visited their plant and their headquarters and one of their plants in Shenzhen, I mean, they really are incredible vehicles. That helps BYD employ more people, pay them better wages. So it has both a implicit as well as explicit positive effect on China's economy. And again, home appliances, those big companies employ a lot of people, very similar to, just think about, Apple has over 500,000 employees of Foxconn in China. So if you're going to give electronic subsidies, tablets, smartphones, computers, that helps employ a lot of people. So it's actually a very interesting strategy that the government's taking. You argue it's a pretty smart one.
Yeah. Speaking of which, are we going to get to a point, Brendan, whereby the likes of BYD and those sectors that you just mentioned, they're going to stand on their own 2 feet? We've already seen Jensen Huang, NVIDIA's Jensen Huang, saying that he thinks it's a real danger if the tariffs continue and they then don't get to sell their super fast chips into those markets, into China specifically, that they'll fall behind in terms of competition. How real of a danger is this?
Well, I think, under the Biden administration, there was a explicit effort to hobble and cripple the Chinese economy, specifically to hurt China technologically with these export bans on chips. And that's created a big problem because it forced innovation in China where, they figured out how to survive without these high-end chips. And it's unfortunate because we saw this same strategy when the U.S. government policy to try to bankrupt Huawei utterly failed because the company innovated their way out of it, and they created Apple's worst nightmare. The Huawei ProMate 60 Plus is a better phone than an iPhone. And so I think similarly, you're seeing a lot of innovation happen in China. And I think what's different under the Trump administration is that corporate voice has a place in the Trump White House, which I don't think existed in the Biden White House. Trump is a business person, and he associates, his friends are corporate titans. And I think that's where you'll see a change in policy. You're already seeing that. This 90-day truce came right after the CEOs of Walmart, Home Depot, and Target met with President Trump. The electronics tariff came down after Tim Cook met with Trump. So again, these voices do matter in the Trump White House. And I think that's why we're more constructive on a positive outcome to U.S.-China trade talks.
Right, because he doesn't want to, what is the term? Bite off his nose to smite his face? That's the term, isn't it?
Yeah, exactly. I think he wants a big, beautiful deal. I mean, he wants a big, beautiful deal.
Drama, fireworks, right?
Exactly. So
yeah, not wreck his house, as it were.
Correct.
Two other themes that we talked about, income focus. You like this theme as well going forward as we're watching this play out, this political tariff tit for tat, and hedging U.S. equity risk as well. Talk us through those two themes.
Yeah, I think one thing about obviously your platform is you have people who are investors but also traders, and I think traders recognize with volatile asset classes like Chinese tech stocks, you can basically buy the dips and sell the rips, but you can also utilize options liquidity in order to monetize that. And so I think that can take a growth investment like China Tech and turn it into an income generating vehicle by writing out of the money or in the money calls. And then I think, one of the partnerships we've done more recently is with the global macro research firm called Hedgeye, which is really based about viewing markets and the economy through the lens of a global macro hedge fund. And that's about economic cycles, market cycles, but trying to mitigate that exposure through option overlays that ultimately hedge funds, they want to provide very high Sharpe ratios. It's not just about absolute returns. It's about volatility, adjusted returns. And so we've been partnering with Hedgeye, and they really do provide some very interesting insights, which I think a lot of the traders that are on your platform would probably really gravitate to.
Nice. I've just checked the particular fund you're talking about. I think it hasn't yet been put on our platform, but we do have the CraneShares CSI China Internet UCITS ETF. But just back to Hedgeye, is this kind of a way to get into like S&P 500 exposure, but kind of like almost weed out that volatility?
Yeah. I mean, Hedgeye is very focused on every asset class under the sun. If it's from individual stocks to European equities, British equities, individual stocks, but I think where we focus with them is as a core asset class that, a lot of people, they want to hold U.S. equities, but they're not necessarily a day trader. They can't necessarily be married to their desktop on a daily basis. So we've wanted to work with them on creating a vehicle that embeds all of that work and allows us to kind of do that work on an investor's behalf.
Nice. So they don't have to stay up at night.
Exactly.
Right. Thank you so much. It's been such a pleasure. Thank you again for taking the time. I know you're usually found in airport lounges, Brendan. So I will hopefully see you this side of the Atlantic sometime soon, which would be great to catch up. And for those of you that want to check out everything we've talked about, do send questions for Brendan or myself on ask@ig.com, which will come directly to me, or indeed check out my Twitter, because we'll also be putting segments of Brendan's interview on there. Thank you so much, Brendan. Have a good rest of your day.
Thank you.
Speak soon.
Appreciate it.